funny when we call her Gabriel. Hey, y'all.
Oh, hey,
Gabe!
how's it going? Am I in the video? Am I in the camera?
And you're
All
live.
of it.
Oh, nice.
Yes.
So, everyone, I was trying to do so we have other ones, but they can't see you.
We have what?
I said we can't see you on our other platforms. Okay, so hold on, Gabe. So our Facebook and Instagram, please go to Theurgy, the Theurgy Logistic page, or Theurgy Logistics YouTube, or Theurgy Logistics LinkedIn, because you won't be able to see it.
Correct. You have to go to Theurgy's page.
You have to go to our actual pages, Theurgy Logistics, Facebook and Instagram, YouTube, LinkedIn, all of that. We'll try to put the link up, upload it. Okay.
If you can't make it, we'll try to upload it later.
Bye, y'all.
Goodbye.
Okay. Did y'all need me to on Facebook or what?
It's on Facebook, it's on Instagram, it's on YouTube and LinkedIn. So we're all of those places. Nice. Or our personal Facebook pages. Okay. So everyone, Mr. Gabriel.
Hey, Gabriel.
That's a joke. That's what he does. Mr. Gabriel Garza is, in fact, our personal mortgage broker. I love him so much.
Yes.
So
he's amazing. He gets the job done for sure.
On time, y'all.
Absolutely.
So what happened was when we decided to move to Texas, we heard about this loan called Entrepreneur
Bank Statement Loan.
Yeah. Right. And we heard about that from Kiana Watson. So we ended up calling Robert Smith of Realty and Lending Team because we know he did mortgages. He was like, no, I don't do mortgages in Texas. He put us in contact with Gabe, the amazing Gabe.
Absolutely.
So,
and we got an amazing house in a timely manner, on time.
On time. That's good.
In a crazy market.
Yes.
Yeah. It was your first house too, right? The first offer.
Yes.
Put on too, which was, considering everything, kind of crazy.
Yes.
So.
Yeah.
So we brought Gabe on so he can tell you about his amazing products. He can push himself because he's amazing.
Yeah. And sometimes as a new entrepreneur, we think that we have to wait.
Mm-hmm.
But if you have a thriving business, you possibly don't. But I'm going to let him
explain it
all to you guys. And without further ado, Mr. Gabriel.
Hey, well, one, thank you guys. Thank you, ladies, first and foremost, for having me on. You're actually my first interview podcast. Whatever these things are that I've done. So I consider that special. I was really excited to join you ladies because y'all are some great folks. So it's been a blessing to know you.
Awesome.
And I want to honor you ladies in your business. So first and foremost, that's huge.
Thank you.
So a little bit about us, we're a boutique mortgage lender. I got in the business over, what are we, 2022 now? So I've been in it about 20 years, in and out of it. I went over the last 10 years, I've been full-time. And then what really I saw was a need for me to be able to take care of my clients the way they need to be taken care of. When you go to a bank, when you go to a mortgage company, you tend to have to fit their mold, and they're always looking out for their company, right? Like they got overhead, they got, you start growing so big, you got all of that stuff. You have to start looking at those things, but it can also put you in a position where you're leaving folks, kind of similar to the predicament you were in, not to share too much because I take every deal personal. But
no, we're okay.
You can share
too much, but it's like, hey, I made a transition. We're kicking butt. We're successful. We're doing this. We're doing that, and we can't get a house. Like, what do you mean? And in even the vanilla loans, there's so much gray area in those things that everybody manages risk different. So I opened up my own mortgage brokerage in 2020, the month the pandemic hit, and so many different things. We kind of opened up at the same time, I believe. We kind of put timelines together, like we kind of joked about that. But I got in because I saw I was having to look out for the person that I really didn't want to look out for, which is you know, the man versus like you, the client,
Right,
versus
right.
how we get in this business, families, and the purpose of, you know, helping families build legacy and generational wealth and things like that. So
That's very important to us as well. Yes.
yeah. And I think, you know, communicating and connecting with you ladies, we figured out we have a lot of common ground as far as like helping people out,
Sure.
being upfront with people when you can't help them. Right now, you know, the products that we're talking about or just, you know, putting out there, they're there, but even then there's still some red tape you got to get around. So it's not like, hey, I got money, just give me a loan. Like there's still some parameters, there's still things, but you know,
Sure.
we got to be honest. We got to be not waste your time, not like, you know, that's frustrating for me. Am I perfect? Are we perfect? No, it happens. Things slip through the cracks and all of that stuff, but that's really the main goal. It's like relationship over transaction. You're more than a number, more than just like, you know, like the next person that came in and you're, you know, I say this, you go to a big bank, and I'm not going to name names of the big banks, but everybody knows you go. A mortgage is a line of business for them. It is not their business.
Right.
Like when you guys were working with me, you were my business.
Right.
Like
So
you are my business. This is all I do. Mortgage.
Right.
That's it. I'm not trying. I don't need you to open a bank account with me. I don't need your auto loan. I don't need your car insurance. Like I don't need nothing. We're doing your mortgage. And my goal is to help you get the best deal, the best thing that's out there for you. You can't, you know, like Tavia and Tamika can share what they got, but you're not them and they're not you. Everybody's
That's correct.
Everybody's different. And so we have to take every deal, every transaction like its own, you know, it's its own baby, and we have to take care of it. And
right. Yes, so, absolutely.
Yeah, I mean, that's kind of what I do. I mean, as far as products, we offer all of the, you know, all of the vanilla stuff is what we call it in the industry, your FHA, your conventional, your VA, you know, my wife's a veteran, so we love veterans. We love helping them out. So thank you to whoever's watching, all that are watching. If you've served,
thank you for your service.
Thank you so much for that, regardless of your stance on where things are at. Just thank you for serving. It's a huge sacrifice, so we're really grateful for that.
Absolutely.
One thing I will say on, if I can, I know we're trying to talk non-traditional loans.
No. We want.
Oh, we're talking anything. Well, I want to say this because I have it. I run into it a lot. There's a lot of VA lenders out there that have veteran in their name, and a lot of people think they are the VA. They're not. The VA, the veteran, you know, if you call the VA, they don't lend directly. You call a bank or you call a mortgage broker, you call a lender, and they are the ones that work your loan, and then the VA guarantees your loan. So they're paying the servicer, they're backing your loan, but the VA directly does not
lend
you the money. And there's a lot of junk mail. There's a lot of people that get like, I run into a lot of people that pay discount points and like overpay for their loans. And they're like, well, I called the VA. You didn't call the VA. Let me just,
wow.
You called a person that's you called a company that's got veteran in their name.
Wow.
And that's kind of, you know, that's the sales pitch. That's the thing, right? Unfortunately, our veterans are left behind and not really educated. So, you know, whoever we can reach, even if it's just one person with that little caveat, like, hey, like you're not stuck to that person that says they are the VA. They're not. Like, if you're getting a loan, they're not the VA. But anyway, we offer that. We offer, you know, I-10 loans for those that don't have a social, foreign national loans. We offer. You're out of the country, right? You're not from the United States, but you want to buy properties here. We have stuff like that.
Wow.
We have stuff for the self-employed folks that don't file enough on their tax returns. Let's just call it what it is. Don't file enough on their tax returns, or, you know, barely getting started and don't have 2 years, which you technically, just so you know, for a conventional loan, you technically don't need 2 years of self-employed tax returns. You do need to have 1 year and then the experience to show that it's in the same industry.
And
that's all dependent on automated underwriting and what is accepted when we run it through. So that's little caveat, you know, little caveats there. Like, ask around if you're getting stuff reach out to us, but ask. Like, don't be afraid to ask get another opinion about where you're at, especially if you're in the loan process. Don't be afraid to go check. Like, don't be afraid to just ask a question. I have several people call me in the middle of deals, and I'm like, tell your lender to do this instead, or tell them to check the option. Like, sometimes that lender might be saying, no, we can't do it. But it's because, again, we're talking about they have to protect their bottom line. They have to protect their risk tolerance. They have their risk. Like, there's layers, and so they're called overlays. So then they go, no, it might be allowed, but we're not going to do it.
Wow. So it's funny because you always hear, oh, you can't do this and you can't do that, and you don't understand the little bitty introsec, whatever that word is. You know what I'm trying to say.
Yeah. Let's say nuances.
Nuances, yeah. Little nuances that can help you get in your home.
Right.
Because I know with us, I remember we were driving in the truck and you called that day and you were like, well, that's it. I was like, Gabe. Get my loan done.
Get it done.
Yeah,
I think at one point in the process they kicked us all the way out, didn't they?
We had a point, if I can share, that's what I was trying to kind of share a little bit about we were a couple months short on 2 years as a business owner.
Correct.
That's it.
That was what it was.
We were a few months short, but we were able to work that and go, hey, no. They've actually been in this industry longer than 2 years doing similar stuff, and here they are. Yeah. And we were able to work around that. It's, like, there's a way. Like, and I sometimes you might not like it. You might not like the workaround or what you got to do. Not saying that you ladies did it. You understood what we had to do. Mm-hmm. But having those uncomfortable conversations is what has to happen sometimes.
Oh, when I tell you it's uncomfortable. Oh my God.
Gabe was like, we made it amazing. Because I remember when we said get the load done, he was like,
that's easier.
All right.
Yeah. Especially when somebody's like on the road, like you got a family moving, like there's a lot of, I don't want to say it, but I'm going to say it. Like, this is one of the things about our industry where I feel like things have gotten, we all should have a right to own a home. I 100% agree. We all should have a right. We all should have, me being a minority, you ladies being minorities, like any minority, black, white, whatever. Just anybody. You live in the United States, you should have the opportunity. You have a right to purchase a home.
1,000% agree.
That's different than being entitled to buying a home.
Yeah.
Right? Like some people are entitled because consumer, like I think, in my opinion, consumer financial, like CFPB, they've made it to where like this, it's just everybody gets a house, everybody gets a loan. Well, you can, but you imagine if I put, I got a client right now going to buy a $500,000 house. Well, if I put $500,000 cash on your table and said, I need this, and that, I need these documents, what are you going to do? You're going to give me those documents.
Right.
But nobody sees it. Nobody sees the movement of the money anymore. Nobody sees, like that. And that's why I really like to work on the relationship, because when I build a relationship, then we know, like you ladies know. Hey, if Gabe's asking us for something, it's because he's helping us to achieve our goal here.
Absolutely.
Yes, absolutely.
We're not just trying to be, excuse my French, we're not just trying to be an ass,
Yes, yes.
And that comes across because it's like, well, I got 780 credit. Well, that's great. But you understand, like, we have to make your loan to somebody who doesn't even know you look good.
Absolutely.
We have to present this information. And so that's really, I think it's really key for us moving forward, like providing that education, providing like what really goes on in the loan. People don't know it until, you're in it. And this process was completely different than you purchasing your home in Georgia. I'm sure it was.
Absolutely.
But there was so many different things happening too. You weren't in the same position you were.
No.
That 10 years ago you first bought that house.
That's
and the loan process is completely different. While we try to make it so easy for everybody and streamline stuff, you still got to prove that you make money. You still got to prove that you have money, make money.
Yeah, yes, we did.
And, you know, and like that this house is going to be your house. It's not going to be a rent. Like there's caveats, and we have, so there's probably, I mean, if you think about it, you have me as your lender, you have a title company, and then you go to the lender, and the lender has an underwriter. The lender they have a closing department. They have a setup department. You know, you have their secondary market. Like you have all these different things. No, to you, we just make it look like me and you, we're right here, right? Right here. You're worried about me. But there's a whole list of people that we got to deal with on the back end that nobody knows about. And think, hey, I sent you my paper today. Did you look at it? Somebody else got to look at it too, right? And so there's a little list. And so I think the more we can educate and help people have that patience to go, okay, I'm really like, I'm working on something here. I'm accomplishing something, right? I don't even want to say the American dream. I think it's just like, for me, it's biblical. Like we all should own land.
I agree.
We're all called to own something. You know what I mean? Like, and so for me, it's more about that.
Oh, you gave me chills, Gabe.
I gave myself chills. I'm good. But I really feel like that. My wife and I really feel like that. And I think it's key. But anyway, there's my little soapbox rant there. But
so what is, when you say for the person that's looking for the loan to have patience, what's the average time frame of opening and totally closing a loan in different loans? I mean, if you got an FHA or you got a bank statement or whichever loan, because again, he said that you qualify for different loans. So how fast usually can you get different loans closed?
It depends how much of the work is done up front. Now, what does that mean? A question popped up here. What does the loan process look like? Well, before you even go look at a house, you should get pre-approved, right? So to get the application done, you're going to submit income documentation, bank. So typically that looks like 2 years W-2. If you're a W-2 employee, let's talk about the vanilla thing first. If you're a W-2 employee, you know, you want to submit your last 2 years W-2s, 1 month of pay stubs, 2 months of bank statements, your ID. Typically, that's what we need to get a pre-approval, right? And what we're going to do for us, what we're going to do in that process is, hey, we're going to run your loan through automated underwriting. When you submit that, we're going to go, hey, you might say, I want to qualify for 350. We're going to go ahead and give you that if you qualify for the 350. And if you can qualify for more, we're going to give you those options. So that way, you know, hey, 350, here's what 375, 400,000 looks like. Here's what 325, 300 looks like. Okay. And here's different rate options, different programs, because somebody might qualify for an FHA loan or a conventional loan, right? Or even if you have a veteran that qualifies for VA, you know, they might not want to use their VA entitlement yet. So then there's a conventional loan. So there's different things. But that's kind of the first thing. Get pre-approved. Normally, your pre-approval is good for 90 days because your credit report doesn't expire for 90 days. Some lenders, it's 120 days. But your documentation, bank statements, pay stubs need to be within 30 days of contract, right? So your application technically doesn't start until you have a property tied to it, right? Up until that point. Once you get a contract, that's really when the whole loan process starts. That's the clock start, right? So if I ran an application, you send me your stuff, we try to have you pre-approved in 24 to 48 hours.
Got it.
Here's you go. You're going to go, you know, if you apply today, most likely it'll start working on it tomorrow, Friday. If everything checks out, hey, here's a letter. You can start going and looking at houses. And typically we want, like, let me know what sales price you're actually going to put an offer in, and we'll give you a letter for that amount. Versus, especially in this market today, you don't want to, if you're not going to offer 400 on a $365,000 house, you don't need to tell the seller you qualified for 400.
That's right.
Because everybody's weird right now. But once you get the contract in, that's really when the clock starts. We as the lender, we're getting disclosures out within 24 to 48 hours. Disclosures is basically the lender document. We're locking you in, especially in today's market. We're not trying to play, we're not trying to play the market. We're locking you in on an interest rate, whatever your program is. We lock you in, disclosures out. And if we need anything updated, depending on how long it took for you to find a house, we're getting that submitted. And then once you sign documents, we submit your loan for underwriting, an initial underwrite. We order the appraisal, we order the title work. Insurance needs to get ordered, whether that's, maybe us referring you to some of our partners, or you getting your own insurance on your own. And then, the big key from a borrower, the big ask is like, don't go open any new credit throughout this whole process. Don't open new credit.
Don't go shopping.
Or Gabe, no. Remember, we went and paid off all of our credit, and he was like, "What are you doing? I should go buy some."
A lot of people don't know that if you pay it all the way to zero, that can actually negatively impact your credit score.
We did not know that, and we did.
Had no idea.
And I think that happened with you guys. That happened before we started. Like before I ran it, you were like, "Oh, we just paid it," and it actually reflected before we started the application.
Okay.
Right.
I was like, "Hey, go charge something," and you did, and then we rescored your credit, and it was where we needed it, or whatever we were trying to get. But yeah, so then that's the process. So typically, underwriting, when a loan's submitted to underwriting, that's about a 3-day turn time, right? 3 business days. Appraisals they were taking anywhere between. I think we took.
Ours took forever.
Almost a month, but hey,
yeah,
money talks. So appraisers are like, hey, you want to pay more? We'll get it faster. That's just really what they.
You got to sweet talk everybody.
Yeah. That's really what they were able to do. Now, we don't talk to the appraiser, so that happens, but we don't get to talk to them. We put in an order through a third party. So let's just clarify that real quick. But they do set a price, and they say, hey, I can do it in this many days or whatever. So. Gets approved if there's conditions, meaning, hey, we need some explanation on some stuff, or the title work might not be back in, that appraisal might not be back in yet by the time they do the first underwrite. So we're waiting. But in all, most of the time, that process from start to finish is 30 days. 20, that's average. We can close faster. It might close later, depending on if we get into the non-traditional type financing stuff. That could be 35, 45 days.
So why does the non-traditional take about 35, 45 days?
Why? It's just a different animal. I mean, and those lenders tend to take their time. Like, just to be honest, they take their time. I mean, you think about it, you give somebody 12 months of bank statements. They're actually they're going line by line, looking at every deposit, averaging out 12 months deposits, verifying businesses. There's a lot more that goes into that. And sometimes too, when they condition you for something, it might take us, me and you, because we have to work on those conditions. I'm here to help you, but ultimately you have to provide it.
Right.
And then you might have to go to a CPA, you might have to go to a third party to get what you need. And then we're on somebody else's timeline on top of that, right? So
correct.
That's kind of how those things can happen. That's typically a lot of delays occur for the most part when a third party is not getting what we need in time. Now, that always falls on us, right? Because I'm all you see, and we got to take that. That's just part of our business, right? I mean, you ladies are self-employed. You know how it is. It falls on you. And we have to take that. We have to eat that. But most of the time, that's kind of what's happening. Hey, that appraisal's taking a while, and you have that vendor reaching out to the appraiser, and the appraiser's not even responding to them. Well, I can't. Wow. What do you want me to go do? We already paid $700 for this appraisal. We can't go. I mean, you want to spend another $700 and get another one done?
Right.
Yeah.
Right.
Those are typically the delays. But sorry, go ahead.
So, since we're talking about appraisals, in today's market, and I understand that it's kind of like this, but in today's market, people are, in order to get a house, they're offering over asking price.
Yeah.
I guess my question to you, and I don't know if this is more for you or for a real estate agent.
Sure.
But what do you say to offering over the asking price? Because technically, I believe they can only get what it appraises for from the lender, from the bank.
Well, you can only get what your own. It's the lower of the two. It's the lower of the appraised value or the sales price. So you're gonna buy a house. So if you're gonna buy a house for $200, we get an appraisal done and it appraises for $220. your loan is based off of the 200, right?
The lower
of the two, right?
Oh, wow.
That's different when we're talking about renovation construction. We won't go there today. We do those loans too. Renovate. You want to buy a house, renovate. You want to buy some land and construct on it. We can help with all of that stuff as well. I mean, we have a full range of product, but talking normal stuff. So right now somebody goes and puts in an offer. Hey, that house is worth $350. I'm willing to offer $400. Your realtor is going to have you sign, most likely, because the seller is going to be smart enough to look out for their buyer. I mean, their seller, right? The seller's agent's going to look out for the seller and go, hey, we listed at $350. Somebody's offering $400. You need to cover your butt. So then they ask you, the buyer, to sign what's called an appraisal waiver. And now that can be a full waiver or a partial waiver. Talk to a real estate expert, but I'm just sharing my experience. Okay. My little cover my butt there, but they're basically saying, hey, we're agreeing. We know that we listed at $350. You're offering $400. And you're saying, hey, I'm willing to pay that extra $50,000 if the appraisal doesn't come in at $400. Or, I mean, you might list for $350 and the appraisal could still be $325. Now you got to pay $75,000 when your down payment is based off of the $325 where it just came in. Right?
So who gets that money?
Well, I mean, if you agree
to
overage, does the seller get that money in full?
Yeah, because you already agreed to buy that for $400 from them.
Okay.
Right?
And what does the real estate agent, where do they come in at? Does it change the asking price?
No.
When you do that?
No, that's what I'm saying. So once the realtors helped you guys negotiate, not you guys, but we're not talking about you, in general. Once a realtor helps a buyer negotiate, buyer side, seller side, they've negotiated a deal. Everything is set at that price. If there's a partial waiver in that deal, let's say our scenario, somebody's buying $350, they offered, listed at $350, they're offering $400, and they go, hey, we'll pay you up to $15,000 over. If that appraisal comes in short, we'll go up to $15,000. So if it came in at $350, we agreed at $400, but the appraisal came in at $365, we're willing to pay the $365 for that or whatever. That's all got to be negotiated up front. Like that all needs to be. And then if you're talking about realtors, their stuff is based off of sales price. Okay. But most of the time buyers don't pay a realtor to help them buy a house. That's already negotiated between the seller agent and the seller. Right. That seller's agent goes, hey, I'll help you sell your house. We negotiated or whatever. And then they work with the buyer agent to do all that stuff. But again, talk to a realtor about that. But as a buyer, they might have you sign like a buyer agreement, buyer rep agreement, especially like, especially if you're being a pain in the butt and you're really difficult.
Yeah.
And the realtor doesn't trust that you're going to stick with them. They're all 100% commission. Like they don't kill, they don't eat.
That's
true. What I mean?
Right.
So it's like if I'm driving around, and Houston's big. I mean, think about that. Houston, Atlanta, Metro. I'm driving all around town, and I'm not going to get paid if you close on a house because I'm not going to ask you for money to pay me. You got to think about that. Like they,
yes, please.
They need to be taken care of as well. But yeah, I mean, so that's kind of the deal. I hope I answered the question.
You did.
Okay.
You did answer the questions. Tavy, did you have any questions for Gabe?
I do. I want to know about the 1099, how people get started with the 1099 and the bank statement loans. Sorry, Gabe, we're traveling again.
Yes.
Are you? You're in a hotel room somewhere?
Yes. So, a lot of our friends that are entrepreneurs were asking like how to get started, the 1099, the bank statement loans, how those work, how they get started, what is it, like all of that. So
the 1099 and bank statement deal, they're two different products, right? So you can 1099, basically what they'll do is they'll use I don't want to say whatever's reported. There's industry standard expense ratios that we use for that. but you need to have at least, again, 2 years of 1099 income, or if you've had a full year, a full 2020, let's just say somebody went self-employed in November 2020, you know, they were in logistics, truck driver, whatever, for a company getting W-2, and then November 2020, they were a truck driver for themselves, and they were all, you know, they've been 1099 all this time now. So they got a full 12 months, right? Because they worked self-employed in 2021 for themselves, self-employed. And they get paid 1099, right? Somebody contracts to drive for FedEx or whatever these logistic companies are in your industry.
Your turn. Okay.
Then we can take that 1099. We can take that 1099, put that, similar to you ladies, right? That 2-year history together, right? Even though one of them was employed. And then we use that 1099 and go, hey, here's like let's say somebody clears 200 grand contract, but they write off everything.
Right.
And so on their tax returns, you know, their self-employed income only reflects as 40 grand. It'd still be enough to buy a house, but probably in today's market, it's really not going to get you much. And they're wanting to buy more. Then we would take that $200,000 1099 and try to use an expense ratio and use that to qualify. Typically, you need a 660 credit score, minimum 10% down. And then you're going to need a CPA, tax preparer, somebody with a valid tax preparer ID to validate basically validate either that you file taxes, that you're self-employed, or you've been in this industry for at least 2 years. So that's kind of how the 1099 works. And the same things I just mentioned, you know, they're going to verify your 660 credit score, minimum 10% down. Depending on the lender. That's why I say minimum. We've got some that are 10%. Obviously, lower down payment, higher risk loan, higher interest rate, right? That's just how it works. Bank statement deal, you got options, 12 to 24 months. There's some lenders out there that'll do a 3-month bank statement and basically 3 months. Yeah. Now you still got to be in business. You still got to be in business for 2 years, but they'll look at a 3-month span of your most recent bank statements and then go, okay. And so what they're doing is they're just looking at what's coming in, what's going out, right? You know, I got a scenario right now. I have a roofing contractor. I mean, their margin, their expense ratios are closer to like 70%, right? So he might be having some $100,000 deposits every month, but he's really only clearing maybe $20,000 a month.
Right.
And so then we have to figure that out. We have to go through that and go, okay, here's our income. We got $20,000 in income to play with, or $15,000 in income when we average that out over 12 months. Right. So you got to borrow that. You got somebody that, you know, some of your folks out there that might be like, man, I'm killing it for the first 6 months of the year. The last 6 months that my deposits tend to go down.
Yes.
Right. And then we average all of that out and go, okay, well, on average, you're making like 15 grand a month. You know, 20 grand a month, whatever that is. And that's our income that we use. Now, again, we got to get a CPA to validate that. We got to get, we do have to kind of validate what you're
looking at
to the lender, right? So that way they know. And, but I mean, you ladies went through that process. You understand.
Yeah.
It can be a little time consuming and it can be a little frustrating. And that would be the big
to say the least.
You know, that would be the biggest thing that I would say to somebody is like, hey, you're going to, especially if this is your first house, like I say this and I mean it as well-meaning for you, the borrower. I would hate that that's your first loan to go through because it can get frustrating because it's not a normal loan.
Right. So in today's market with the homes, I guess the low inventory of homes.
Sure.
Is it more difficult to? How are these loans faring in the market right now?
Well, they don't really. I mean, if you're going, hey, I'm a buyer. I'm using a bank statement deal. When you go put an offer in, they don't like. You only have options on a third party financing. It's conventional, FHA, VA, USDA. Everything falls into conventional, non-conform. Like, these type of loans fall into that bucket. So there's really
so jumbo loans? I've heard of those. What are those?
Yeah, jumbo loans are in Texas, any loan that is over 647,200.
Okay.
Okay, so that's a jumbo loan, right? So, you know, if you're buying a house at 800, but you're willing to put enough down payment at 647,200 to get it there, you would fall in what we call conforming loan limit. That's Texas. Okay. Every state is a little bit different because real estate can be expensive in California, these different things. But that's
so where do you do loans at?
Right now, Texas, and then we're in the process of getting licensed in Oklahoma and hopefully Utah and maybe Florida. They just got some weird things that we've got to work through. But currently Texas, which is the greatest state to be licensed in anyway.
Absolutely.
Everybody's moving here anyway. So it's not like,
horns.
Oh my gosh. Get out of here. We're done. We're done. We're Red Raiders, baby. Red Raiders. That's what we do here.
Oh God, no. She's a Falcons girl.
Oh yeah. Born and raised in Atlanta. So
the Dirty Birds.
Oh yeah.
Yeah.
They're dirty, all right.
I can say they cluck.
Okay.
No, but yeah, that's where we're at. That's what we do. You know, if anybody has questions on loans, you can text me, 214-927-1421.
Okay, one more time because we're going to put it up on the screen.
Okay, 214-927-1421. That's me. That's my personal cell. That's my work cell. That's.
And he answers, y'all. He really does.
I answer. I try not to answer too late at night, but I do answer. You know, I understand that everybody's a little bit different, but I got a family just like y'all got a family. You know?
Right.
I got to spend time with my family just like you should be spending time with your family. You know, we're raising.
And your email address?
Email is gabe@hellomortgagebrokers.com.
Okay.
Mortgage Brokers is spelled all the way out?
Yes. Yeah, it is. Mortgagebrokers.com. And you can email questions there. And like I said, I do respond. If I don't respond in like 24 hours, text me because most likely I missed your email. But we try to be pretty responsive. We get things done. Yeah, I mean, dude, we're just here to serve people, make sure everybody's has an opportunity to get what they desire. You know? Yeah.
Absolutely. Well, we appreciate you for coming and joining us tonight, Gabe.
Yeah.
We have some things in the works, so we need to call you anyway.
Absolutely.
Yeah, I was like, you know, we'll talk about that later, though.
Yeah.
So, thank you so
For
much,
sure.
man. This was so fun. Anytime we need to talk about anything else, help your folks out, help your audience out, I'd be grateful for it, you know. So I'm really thankful.
Awesome. Well, I'm glad that you were here to help them.
Did you enjoy your bourbon?
Oh man, I'm slow sipping that stuff.
As you should. That's hard to find. So
yeah, I know. I'm waiting on my next package.
Okay.
I
got you.
I got it.
Guys, we are going to let Mr. Gabe go tonight
because he has to be with his family.
Yes, and Gabe, we appreciate you for coming on.
Yes, we appreciate you, Gabe. You're amazing.
Yes.
We'll see you guys later.
Thank you, sweetie. Bye-bye.
U.S. ports are backlogged and 80,000 truck drivers are needed to help fix the supply chain. The demand is real. And with fewer truckers and drivers to pick up cargo, now is the time to get in with the earning potential of $120,000 a year.
Learn how to start your own trucking company with the Theurgy Training Institute. As a 3PL company with over 25 years of experience in warehousing, ground transportation services, air logistics, and import-exports. Join our mentorship program for $9.97.
We're here to teach you how to properly structure and operate your own trucking company so you can come manifest the lifestyle you've always wanted. You will learn the difference between a broker and a carrier, licensing, and how to find your niche. We will teach you how to set up and run your trucking company as a business and not a side hustle. Only 10 slots available. Visit us at the link below.
We are Theurgy, and we are here for you for the long haul.